Geopolitical shockwaves sent Nasdaq down more than 3% on Friday. Trump to set more tariffs on China after China restricting rare earth minerals. That was what I was speaking about in week 41 when I said that markets are super strong. But the black swan event may happen, and if it happens, it will be a geopolitical issue. But I'm not so sure that this will be a very long-lived one, despite the Friday fall making all three markets going in red. Nasdaq down 2.53% week over week, Dow Jones 2.74% and S&P 500 down 2.43%. Most people were happy until Friday, and on Friday a lot of you should see huge falls. Even I saw my portfolio fall quite heavily on Friday. But what I think is that the markets will bounce back, at least early in the week. For the rest of the week it's a little bit harder to see, but because once a scare is set into the market, it can continue. And markets just been going up. It is time for a short-term correction, but right now, after the huge fall on Friday, we are at support levels from the trends. Will the trends be broken and then signal perhaps maybe a bit longer-term change in the market, or will, as I said, we have a bounce up? In my world, I believe there is a 70-30% chance for a bounce up, meaning that on sometime on Monday or Tuesday there will be some news calming the markets, and we will be back on the strong upward trends towards 25,000 points. You are listening to the StockInvest.us podcast Trading Tips with Jim, as we're heading into week 42, a little bit later than normal. But due to a slight sore throat on Friday, I had to postpone the podcast till today. But still, week 42 is yet to start. It will start tomorrow. So you get the news first, and if you like it, you have to subscribe, of course, and hopefully also like the video. I will make this a very, very short podcast. No need to make it a long one. The week ahead of us, in general, will be somewhat quiet. The most exciting thing is the bigger earnings again starting to pop on. The quarter 4 earnings with the major banks leading the way. And these are the things that actually can make the market change trajectory a little bit if the earnings starts to miss. After beating earnings in Q3, most companies were beating earnings, and especially the banks were beating the earnings, pushing the market upwards. The thing with China, we will see how it will play out. It will be, of course, major focus around these things. What happened is that China is biting a little bit back, and especially rare earth minerals. They are trying to restrict export of rare earth minerals, which is highly used in all computer components, among other things. So if we cannot get access to this, then we have a slight problem, and that thing is the thing that brought the markets down on Friday. Anyway, the week ahead of us will have some quarter results coming up. There will be some Fed talks. Monday will in general be a very quiet day. As such, it's Tuesday which starts. So I guess Monday will be more or less about news flying all the ways, about what will happen, about tariffs, because Trump said, okay, you restrict rare earth, then I slap you with 100% tariff. And that thing caused, for instance, NEO to take a major fall on Friday. Anyone following the podcast knows that I am into NEO personally. I'm also into NEO in the $1,000 challenge, where NEO were making such big headwinds, pushing the $1,000 challenge above $5,555. But after Friday, it's down to $4,724. More about that at the end of the podcast. Following up on Tuesday, there will be a lot of Fed speeches. There will be Bowman, Powell, Vallon, and Collins. All of them will talk. There is no big expectations for anything special. People are, of course, worried about interest rates. Will they be slashed? Because if interest rates get slashed, the markets usually go up. But if interest rates are held high, then markets usually struggle a little bit. Personally, I find the T-bill auction a little bit more interesting. Also on Tuesday, it is the ability to sell printed money. Will be very interesting to see where it is. Right now, the 10-year Treasury yield is falling. It's a good thing for the market. It's staying at 4.05. It was up at 4.80, now it's down at 4.05, and it keeps falling. And that is what I believe, that the 10-year Treasury yield will keep falling. Wednesday is another day with the Fed talks. It will be the beige book showing. Expectations is that they will tell that growth is slowing a little bit and that inflation also is easing. That is the expectations from the market, that growth will be slowing, the economic growth, because it's been a super strong growth, that it is slowing a little bit, but also that the inflation pressure is easing. One thing that is pushing high pressure on inflation is the oil price, mentioned a million times in this podcast. And as I said, I believe oil will continue to fall. And last week it fell again, $3 down at $59. Such a good thing for the world economy, and I think it will keep pushing downwards. Energy will be cheaper, and energy will fuel the growth that especially US will benefit highly from. Europe will come a little bit later. Talking about oil, on Wednesday will also be the inventory, the crude inventory. We know that during Biden he was emptying the strategic oil, pumping US strategic oil reserves into the market in the hope of pushing the oil price down. After talking the oil price up, he tried to push it down to ease the inflation. But from the numbers, I see that Donald Trump is refilling the inventories again. If things happen, any country does absolutely need the reserves. It's a very, very important thing because your army cannot keep going unless you have reserves, or if anything else happens of major incidents, you need your strategic reserves. There will be another round of Fed speech on Wednesday, but nothing really big. But earnings will start to pop up. It will be Johnson & Johnson, interesting from the perspective of inflation. Goldman Sachs will come, Citigroup, Bank of America, PNC Finals, and Schwab. The bigger ones are coming in, but banks, they make money even if markets is down, even if economy is bad. Banks just rake in money, and I cannot see that they will disappoint. I think actually it will be on the upper end. I will not go too deep into the details, but also the market is expecting that they will do. When there is a high expectation, you don't have to disappoint much before the stocks will fall much. So if you're sitting into any bank stocks, of course, you should know when your stock has earnings release. Thursday will be a little bit more interesting because we will have PPI numbers, producer price index, and it's expected that to fall a little, that inflation will show a cooling effect. And I think now for this quarter Q4, I think we will see much more positive reports in the news about the effects of cooling inflation. I think that you will see gasoline prices, food prices, a lot of these things we will see across the line, along with the new deals on drugs, especially US, for the American consumer will absolutely ease. And when expenditures are easing, there is a higher chance that money will find their way into the stock market. Again, just arguing for why it might be still a strong upturn. Jobless claims will come, but they are not expected to be anything special, just a little bit above the standard 227,000. claims per week. All numbers are under a little pressure. There is a shutdown in US, and that causes a lot of reports to be delayed, or some will not even come. Housing numbers is also coming. There is a lot of questions about housing around the world. I saw even in Norway there is a lot around the housing in general. New tax rules in many countries are forcing people to sell their second or third home if they have. Renter starts to skip out because you cannot make any more money in the market. If market is flooded with houses, you can have a housing crash, and that can be very hard on the economy. You just have to go back to 2008 to see what can happen if house market starts to crash. Then it was bad loans, but it's some of the same. Anyway, continuing with a lot of quarter results. Also on Thursday it will be Morgan Stanley, US Bancorp, Abbott will come, Kinder Morgan, and CSX will also come with quarter results. On Friday will be a little bit less. Monday and Friday is usually not so much quarter results coming, but there will be a few of them. Taiwan Semiconductor will be the most interesting, maybe for the entire week. I would say it will be one of the most interesting coming on Friday, and expected to have a rebound. Travelers, Tröst, and Infosys will also come on Friday. Economics, more nothing really special. Industrial production will come out month over month, expected to increase by 0.1%. So there you have it. The week is expected to be slow, but we start with a scare. We start with that Friday scare, and it should follow into the beginning of the Monday. Sometimes hard to say exactly how it plays out. The rest of the week will, in my opinion, follow a little bit about the bigger banks. We can have the following scenario, that there will be no real easy news around tariffs, China and rare earth. You know that this conflict will be somewhat hardlined, pushing hard up in the media, following by some bad, or let's say not as good as expected bank results, and suddenly you can have a very red week. Highly high chance it may happen. The other thing that may happen is that you get the news on Monday that US and China just had a slight misunderstanding, that the talks are back on place, and boof, you have a super green market. What I'm trying to say, no matter what happens, I don't believe it will be a steady week. It will be a either or week. That is one of the reasons why I started so many weeks ago to slowly start to sell out some of my positions, to not be too exposure into the market. I told you that exact same thing last week in last week's podcast, that maybe this is not the time to be too much exposure. I betted for a red week last week. Red week it became, and this week I have to say one thing I'm just sure of: it will not be an even week. It will be either or. But I think actually that we will have a rebound, meaning that 70-30 on a green week. Anyway, knowing this doesn't mean that you should spit in all the money that you can into the market. It means that you should be calm, and you should play steady. I'm just saying that I personally find that a higher chance for markets to go up, but it might be, as I said, the time where we can have all the arguments for a little wider correction. Right now we had the 3% correction that we saw on Friday is just natural. Just see how much market is going up. You just needed some sort of ignition to set off a small little firestorm. And I've seen this a million times, and what happens is that you think that you will buy cheap on Monday. Maybe you have some 5-10 minutes in the morning on Monday before markets again, and prices just are jumping up almost to the same levels. Just a few typical scenarios in this situation. So as it says, you can have a slight scared opening. People don't know exactly where the market is. First few minutes, if you are to buy, you should buy in the first few minutes usually, and then you see that the rest of the day just go green. So if you had Tesla or NIO, for instance, which were falling down to 670, you might be able to pick up some stocks around 680 maybe, just to see the price tick up to 70.20, 70.30 in just a few minutes, and just keep trading above these levels later. I've seen that scenario. Other scenario that I said is that you get pushed in more news and markets just continue down. Usually really bad falls like this are followed by 3. But very often there is different market conditions like this. But if it's followed by 3, it is very often that you have a red opening first few minutes, then it goes up very high, and by the end, let's say the second half of the day, markets again start to fall, ending red in the day. Very, very volatile, typical trader's dream, but you just have to be very careful with what you do. The buy and the sell signals, they have been dropping quite much, of course, across all the tickers that we analyzed. 24% is giving buy signals, Nasdaq only 12% signals, falling from 20 last week, and New York Stock Exchange down from 35 to 16, London to 7. Again, all of these are places where you get into a possible good buying situation, but it's also the levels where you can have even more rapid falls. I wouldn't say they are exactly where I would put all my money in. I went out, as I said, I started to reduce my exposure in the market, meaning that I have capital. I'm waiting for a good buying position. I'm not sure it's yet here, but I will for sure look at Monday with sharp, awake eyes to see if I can pick some of my favorite stocks a little bit cheaper. But I want to see how market is reacting, what is boiling, because during the week there hasn't been much really strong news. London only 7% buy signals, Oslo 24, same like last week, Frankfurt 27, National Stock Exchange of India 24, Tokyo 23, and Shenzhen China 29 like the week before. All in all, this just says that buy signals are starting again to get cheaper after the huge fall on Friday. We start to get in a position, but they're also at the levels where we can see more rapid moves. Sum it up, I believe 70-30 for a green week ahead of us. I think it will be highly volatile, so either it is going to be 3% plus down during the week or 3% up during the week. There will be no in between in my opinion, and you should follow some of the bigger banks. Johnson & Johnson will give you an idea about inflation, while the banks in general not so much. I will follow more what they actually say about the future, the expectations of the future. But anyway, we can see the tone being set for what to expect as the bigger companies again will report their quarter results. Last thing on the agenda, of course, unless you need me to repeat it, press subscribe and like if you like the podcast. That will help it grow. And I appreciate comments, and thank you a lot for the last comments asking if I was with good health since the podcast was not out as usual. As I said, I just had a sore throat, still can feel the sore throat, but trying my best as always to deliver the podcast to you in hope that you will find some wisdom and it will help you grow your portfolio a little bit. The last item, as I said, is the $1,000 challenge, where I try to grow $1,000 as fast as I can. And lately I've been playing NIO, and I said that if NIO pushes upwards to 8, it should be a good place to sell. NIO was up at 787, and I hope a lot of you took that advice, because right now it's sitting at 671. I am stuck in the place where I said that I will tell you before I do anything, and I'll keep that promise for the $1,000 challenge. I keep that promise, still sitting in NIO. I think NIO will bounce back. The two ways I see forward is the two ways, because now we've been testing 8. We've been very, very close to $8. And it shows it shows all the signs of a previous trend break from the long downturn trend to an upwards trend. I think something very, very special has to happen for that not to be the case. So no matter what happens, I believe NIO will push upwards, and I think NIO actually will hit $24 in maybe somewhere around 16 months, 16 to 18 months. It will be up at $24. That journey will, of course, not be that straightforward. It will be a little bit up and down. Now we have a reaction back, and I think this reaction back will build for further upturn. I will not be surprised, given that markets gets back to a steady case where the tariff scare is again being brushed under the carpet, things get back to normality, that you will see NIO very, very soon climb to $10. But if markets are starting to get scared, NIO can easily fall back to 5. So you should be very, very prepared for both scenarios. There will be no easy free lunch. But again, my bet is on the more positive side. That makes for this week's podcast. 20 minutes will be one of the shorter in the long term. Usually they are half an hour, but most of you are probably happy that it isn't longer. I am a little happy. After all, it's Sunday evening, and I will have a slight relax. Anyway, I hope, as always, that your portfolio will be much greener by the end of the week than it was in the beginning of the week. And if you didn't manage that last week, that was due to Friday. And again, as I keep saying, have your stop losses, have your overall strategies, and when these things happen, you sleep a lot better, because big gains can be gone in a single day. Happened 100 times before, will keep happening 100 times more. I hope you will be back next week when I will be back. Bye.
Welcome to StockInvest.us stock analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information, you agree and are held liable for your own investment decisions.